Hello and welcome to 3.0 TV. I am Vishakha Thakur. With over $100 billion in assets under management, US Bitcoin ETFs are gaining significant traction and crypto is becoming a mainstream asset class. Where traditional safe havens like gold are seeing outflows, while altcoin ETF filings stack up amid shifting regulatory signals. So to understand where the capital is flowing, what's driving investor behavior, and which products and players are poised to lead, I am joined by a very special guest, Mr. James Seyffart, a seasoned ETF research analyst at Bloomberg Intelligence. With specialized expertise in the coverage of ETFs, mutual funds, hedge funds, and focus on crypto and Bitcoin-related fund products, James is one of the top voices in the ETF space and the asset management industry. So welcome to 3.0 TV, James.
Yeah, thank you for having me. I'm happy to be here.
Well, it's a pleasure to have you with us today. So, James, to begin with, as per Bloomberg's data, gold ETF saw $2.8 billion outflows in the last 5 weeks, whereas spot Bitcoin ETFs attracted over $9 billion inflows. So what do you think is the major reason behind this shift in capital flows?
Yeah, I mean, also you got to take a step back a little bit further than that. Ironically, the exact inverse was happening a couple of months before that, right? So gold ETFs went on a tremendous run, taking in tons of assets. Gold was performing extremely well while Bitcoin wasn't performing well. So they're kind of yinning while the other is yanging, right? So they're zigging and zagging in different directions. But for the most part, they have some similar overlap. They're both kind of used as like currency debasement hedges in many regards. But the Bitcoin side of things is much more linked to liquidity in the overall market and risk assets even. Gold isn't really seen as a risk asset in the same way that Bitcoin is. But Bitcoin ETFs towards the end of the year into January, were catching up to gold ETFs and assets, at least in the US exchanges. Right. That is crazy considering the gold ETFs were only a year old, and I mean the Bitcoin ETFs were only a year old, and the gold ETFs have been around since 2004. But after that, gold went on a tremendous run, and now they have many $180 billion in assets roughly. Bitcoin ETFs went down below 100 billion. You said in your intro that they're over 100 now. That's correct. They're over 120 now. So like there's this kind of like catch-up trade. We do think ultimately the Bitcoin ETFs are going to surpass the gold ETFs and assets and likely be a multiple because they're more of a risk asset and a currency hedge, like currency debasement hedge. So we think that the Bitcoin ETFs will be a multiple of the size of the gold ETF. So there's a lot of this going back and forth, but right now I think it's more that people are piling into risk assets, including equities and other things. And that's why gold is kind of underperforming on the flow side when it's compared to the Bitcoin ETFs.
All right, that was very interesting. And, now coming to Ethereum ETFs, they too have started witnessing a significant inflow since the past few weeks, wherein ETH ETFs attracted over $564 million inflows in the month of May. So who do you think is leading the flows, and is it retail or institutions?
Yeah, so we know about 20% of the holders of the Ethereum ETFs as of the end of March. We can use 13F data. Institutions are required to file, but it's only about 17, maybe 20% of the holders are known for the Ethereum ETFs. So that means that like 80% at least is unknown. A lot of that is almost certainly going to be retail. A decent chunk of it could be overseas in international investors. One of the biggest users that we do know are using these things, aside from people that are market makers just making markets and holding this on their balance sheet, are hedge funds. And the hedge funds are likely using this as something for the basis trade. You mentioned they have taken in a ton of money, over $800 million in the last 6 or 8 weeks or so. Again, similar story to the Bitcoin ETFs. The Bitcoin ETFs, they saw about 5 billion go out in the first part of this year, and now they've had 9 billion come in. The Ethereum ETFs have had a similar story. They had $800 million to $1 billion go out in the beginning of the year. They've had over 800 million come in the last 6 weeks. So it's kind of like these reversing trends that are happening. But the basis trade is definitely happening with these ETFs on both sides. But the Ethereum, the yield is a little higher. And just to be clear on what a basis trade is, essentially what these hedge funds are doing is they're using these ETFs as the spot end of the trade or the long end of the trade. So they're going long the underlying spot asset, and then they're selling the futures forward. And usually why they're doing that is because the futures are trading at a higher price. And theoretically, over time, it's mostly risk-free because those assets meet together at the same date. So like when you're selling the futures product at the end of the month, you're completely hedged. You're a delta neutral position, and there's a yield there. And sometimes that yield is going up to a double-digit annual yield. So 10, 12% on an annualized basis if you're just buying the ETF and shorting the futures, you have no exposure as long as you're hedged properly, and all of a sudden you're getting a yield. So these ETFs are being used heavily in that regard. But for the most part, the vast majority of the holders of these things on both the ETF, on both the Bitcoin side and the Ethereum side, is retail investors.
All right. So the retail is currently leading the inflows, but a US SEC is yet to give a green light to Ethereum staking ETFs as of now. And recently it stated that Rex Osprey staked ETH and Sol funds may not qualify as ETFs. So, however, the SEC also confirmed that staking on a proof of stake blockchains like Ethereum does not violate securities laws. So, given this background, what is the likely timeline for staked ETH ETF approval, and how might it impact the market?
Yeah, so that's a really good question. I mean, we can get really in the weeds on this one and talk about it for way longer than we probably need to. But the Rex Osprey filing is unique. A lot of people saw that and saw the SEC was fighting it and thought the SEC was fighting staking, and that's not what was happening there. Rex and Osprey are a smaller issuer. They were trying to get out first with a unique approach. And basically what they were doing, they were trying to wedge these digital assets, Solana and Ethereum, into a unique structure. They're going to use a Cayman subsidiary within the ETF. They were going to structure the ETF as a C corporation, which is also, again, very unique. And they were trying to basically do these clever regulatory and legal frameworks to get out first with some sort of staking access for end investors. And the SEC is kind of saying at this point, no, that you don't meet all of our rules and criteria to actually do that, right? So that's where the current debate is as of the time recording this. The more longer term thing that most people care about are these spot ETFs that we were just talking about, the Ethereum side of things, and ultimately the approval of spot Solana ETFs. Will they be allowed to stake? And the SEC is still figuring out ways to do that, but they're working towards it, right? So the deadline for those types of filings, the first final deadline, is in mid-October. So if the SEC is able to come up with a framework by mid-October, I would assume they're going to approve these applications to allow for some of these Ethereum ETFs to start staking the underlying Ether that they hold. There's no rules yet, but I know for a fact, talking with people and hearing anecdotal data and just seeing signs, the SEC is having meetings with people to try and figure out how they can do this. And the framework will come out. I'm confident there's enough money, enough people behind this trying to work out a way to fit this within the current US rules and regulations and the way that things are structured, that it will be done by October. But yeah, there's a lot of people working towards this, and I think it's ultimately going to get done.
So, okay, we'll get into the details of the framework which SEC is about to come up with. But apart from Ethereum, the SEC is currently reviewing over 70 altcoin ETF applications, such as those of XRP, Sol, AVAX, etc. So which altcoin will be the next to get a likely approval?
Yeah, so ironically, the first thing that will be approved is likely one of these basket ETFs. So the vast majority of the assets in these things are 80 to 90% Bitcoin and Ethereum. And then the other 15 to 10% or so are in other assets that you were just talking about, Solana, XRP, Doge, Polkadot, who knows, Avalanche. They're like smaller portions of the portfolio. Those things are likely to be approved this summer, we think. So those will be the first altcoin ETFs, but they're not going to be pure exposures. It's possible that they come up with a framework that they announce and we actually see multiple single asset coins, single asset ETFs approved in this summer. I don't think that's my base case. I think they can approve these products, these basket products, when their final deadline is due. The first one is Grayscale's GDLC that's due on July 2nd. So I think we could see that come through. After that, the next one that's going to be approved is going to be Litecoin. But we also think a lot of these other assets are going to be approved. So Litecoin is due for a final decision on October 2nd. It's theoretically possible the SEC could approve it earlier. I think there's no questions about Litecoin's commodity status and a whole bunch of other things. It fits within all the requirements the SEC has. But Solana, XRP, Dogecoin, Cardano, Polkadot, HBAR, Avalanche, we think all of those have a pretty decent shot of getting approved this year.
Wow. So now you also spoke about the framework, and in an exclusive interaction with 3.TV, Mr. Eric Balchin has also mentioned SEC is going to come up with the framework before approving altcoin ETFs. So what can we expect in this framework?
Honestly, I'm not really sure. We've gone from a point of view with the SEC where it was, what are they going to allow to get through, right? Like what possibly ETF is going to get approved by the SEC? So we went from seeing Bitcoin, and then we were like, Ethereum's next, and what's next after that? And basically nothing was next for a long time under the prior rules and regulations, aside from maybe Litecoin. We've kind of flipped the script here. We have a whole new administration at the SEC and obviously in the White House. And then we also have this crypto council within the SEC that's trying to figure out ways that they're the crypto task force, as they call it, that they're trying to figure out. So they're trying to figure out that framework. So I don't have any special insight. What I will say is that they flip from what will we approve to where are we going to draw the line and not approve. And I think they'll probably use things like liquidity and these other metrics, the market cap and things along those lines, potentially to say what they can and cannot approve. It might be something like you need to have your own chain in order to be put into an ETF wrapper. I don't know, but then again, they say meme coins aren't securities. So if they're not securities and they're not worried about it, what rule are they going to use to not allow those things to be put into an ETF wrapper? Right. Who knows? So they're going to draw a line somewhere. I just really don't know. I think the vast majority of things that have been filed thus far are likely to be approved. Aside from some other things, there's some esoteric filings like the 2x Melania coin and Trump coin things, which will be interesting to see how the SEC handles, considering Trump is ultimately their boss.
That's right. So US President Donald Trump's company has today filed for a Truth Social Bitcoin ETF to be listed on the New York Stock Exchange shortly after launching his meme coin, and even an ETF filing around that. So can Trump's influence result in approval of these ETFs, or is there a different angle to it?
It's possible that his influence could have, but I think even without his overall influence right now, the SEC and the people running the SEC are leaning towards approving. They're just trying to come up with that framework you were just asking about, right? And also, to be clear, the only thing that Trump has filed for at this point is the Bitcoin ETF, which we already have plenty of those approved. And it's pretty much guaranteed to be approved, assuming they meet all the requirements that all the other ETFs have to go through. So the question remains to be seen about these other assets, but Trump's team seems to be focused mostly on Bitcoin and ETH, but I think that overall he's trying to make this like they want to make it pro crypto or pro digital assets within the US. So that framework and that talk from above is making it more likely that these assets and varying different types of these assets are going to be approved by the SEC. And there's going to be some cooperation between the SEC and CFTC. And also, obviously, the big thing right now is there's a huge debate within Congress about a market structure bill. So we don't know what's going to happen on that front. But if we do get a sort of market structure bill out of Congress, that'll clear up all of the questions that we have here. But until then, the SEC needs to come up with their own sort of framework that they can, within the rules and regulations of what they're allowed to do to approve or disapprove these different digital assets ETFs.
All right. Now, coming to the asset managers, BlackRock's IBIT, just 1.4-year-old, is already making among the top 25 ETFs, making it the youngest on the list by over a decade. So how does IBIT stack up against other asset managers? IBIT is arguably the most successful ETF of all time. It actually is probably not even up for an argument. To be one of the top 25 largest ETFs in the US with only less than a year and a half old, as you said, is unbelievable. And right now they are dominant in the trading volume side of things, so that's very critical for institutional investors. So IBIT is the most traded spot Bitcoin ETF. It owns 95+% of the options trading volume, so it's also used for its options contracts. No matter how you slice, it's taking in most of the money. It's just taking its lead, and this tends to be how ETF categories shake out. Usually there's one product that's used by most people, used heavily by institutions, but there's plenty to go around. You got to realize that the other 10 spot Bitcoin ETFs that are out there are all very successful ETFs in their own right, with hundreds of millions, in many cases billions and billions of dollars. It's just not the level of IBIT. So IBIT is just knocking the lights out right now. But for the most part, it's been a tremendous success for BlackRock and for the ETF industry. Absolutely. Now, with over $120 billion in assets under management, like you pointed out, what kind of AUM growth are you expecting by year end?
Oof. The problem is the AUM is so dependent on price, right? So there's two things that go into your AUM calculations. A lot of people think how can the AUM grow by so much if the flows aren't that good, or how can it go down if the flows are strong? Right. And it's because AUM is determined by the underlying asset performance and by flows, whereas flow is more a pure expectation of underlying demand. And we think the demand is not slowing down anytime soon. So there's a lot of RIAs, investment advisors, wirehouses that are basically turning these ETFs on to be for these advisors and brokers to solicit or recommend these as a part of their portfolio. And as that happens, we just got an announcement of Stifel, which is a big firm here in the US that manages a lot of assets. where their advisors are allowed to recommend investing in some of these ETFs, namely the Bitwise BitB ETF and some others. So, I mean, all of those things are making it so that there's just more capital that can come into these ETFs. Investment advisors are the biggest users of ETFs globally, particularly within the US. So anything you can do to open up the investment opportunities for those investors is going to grow demand. So we expect flows to do extremely well. And obviously, the one thing that really will determine AUM even more than flows is going to be the underlying price. So depending on what price does, we expect it to be pretty strong. But we don't necessarily think it will top the flows we saw in year one, but it could get around there, which again would just be tremendous for all the ETFs. The other thing I would point out is the recent few weeks that you were talking about with 9 billion of flows, right. A staggering majority of those flows went to IBIT, which is very interesting to see because it's not going to some of the other assets, which might indicate that it's a lot of institutional investors coming into the space or those registered investment advisors again. So we think there's a lot of demand for that can come in the next year or two for these products.
So do you have any numbers in mind?
I think 10 to 20 billion. I think 20 billion isn't out of the question, but I haven't really thought about exactly what the numbers would look like.
All right. Now, can you throw some light on current market or macro trends that are influencing flow behavior across Bitcoin and Ethereum ETFs?
I think the one thing that will influence the Ethereum ETFs is if staking is allowed. So, I mean, that's not really a trend, but like that's the number one thing that I think is holding it back. Because if you're holding an asset that has a specific yield and you can't actually partake in gaining that yield, it's kind of like taking your cash and putting it under a mattress, right? You're not able to earn the yield and it's going to lose its value as the inflation happens in that asset. So I think that's one thing that really matters. But overall, I think it's just the concerns over the debt and a lot of other things here in the U.S. Has driven a lot of people to consider these other assets like gold and like Bitcoin. But yeah, there's just overall, it's more the performance that is begetting more interest and demand. And I think the one thing that we have heard from institutions around these Bitcoin ETFs where they finally got interest is over the last few months where there was a bit of decoupling from risk assets more so than most people expected. And they were like, okay, maybe I should start taking this a little more seriously than I was. So on the Bitcoin side, that's probably the number one thing we're hearing from our Bloomberg clients ourselves and from even ETF issuers.
All right. So thank you so much for sharing all the data, research, and all the insights with us. It was wonderful having you on the show, James.
Yes, it was wonderful being here. You asked some really detailed and really good questions with great data. So good research work.
Thank you very much. Means a lot.